Hello, today is Thursday, the 24th of April, 2008. This is Brian Shannon from AlphaTrends.net, and the market's closed. We had another bullish session here today. The S&P 500 finished with a gain of 93 cents, or about 0.65%. You can see the market made it up towards this level that we've been looking at as our more important area of resistance, near that 139.75 to 140 level. And, this little bullish flag that I pointed out yesterday looks as though it's been broken to the upside. Yesterday we said that basically getting above 185 would be the key level, 138.50 rather, to 139 would be the key level for that. The market did sell off a little bit late in the day. We'll take another look at that in a moment. But early on this morning, it looked, a lot different than what we were seeing here towards the middle part of the day. It looked a little bit ominous here early on when the market came down, but did hold above that 137 level. So if that 137 level had been taken out, then I think you wanted to get a lot more defensive on this market, because that would have confirmed this lower high. Now, in order to get a downtrend, you do need lower highs, but you also need a lower low, and you can see that 137 level did hold in there. So there was no reason to be really panicky in there, but there was a reason to be concerned that if the market was to break down, it would be a good thing to move to the sidelines. What happened instead, obviously, is that the buyers came back and took control, pushed that market back up above the daily VWAP, and from there they held control for the rest of the day. And it was just another real nice, neat pattern of what you typically find in an uptrend. This is the same thing you look for no matter what the time frame. It was these higher highs and higher lows where we see an expansion of volume on the upside, followed by lighter volume on the contractions. And that pattern persisted right up until we saw a little bit of profit taking here, sucking in some short sellers. But as long as it remains above a rising VWAP, you generally want to give it the benefit of the doubt to the buyers for that time frame that you're studying. Buyers took back control in here, pushed past the morning highs, and then when that level failed to hold right in here at this 139.40 or so, you see that's where this support then became resistance when we had a little bit more aggressive selling here late in the day. So that's going to maybe make the market a little bit wobbly on the open tomorrow, because we saw just the opposite of what we want to see, which is heavy volume on the downside, followed by low volume in here as the market stabilizes, and then low volume once, or heavier volume once again as the market declines. So overall, on the larger pictures, we've still got a mixed picture here on the daily time frame. This 140 level is going to be very key for this market. We've also got this downtrend line that comes in right about that level, and again the December lows that come to about that 144 level or so. And if the market can get above this 140 level, it tells us that we might be in for a little bit more of a short squeeze rally up towards that declining 200-day moving average. But the weekly time frame is still giving us reason for concern. You can see that the volume on this rally here the last several weeks has been definitely a tradable rally where there's been good upside to be made, particularly in a lot of the individual stocks. But the lightning volume in here indicates that the buyers may not be, their conviction may not be there, so you still have to be very careful. You still have to pay attention to these important levels of support, such as 137. Breaking below 137 over the next couple of days would be a negative for this market. That could see this attempted rally and that breakout right in here come back down, and maybe we see another test of that 50-day moving average near 135. Overall, we're still range bound in here. We're up near the high end of that range. There's a lot of hope that this market will be able to push past there. We're seeing good responses to earnings. Apple, I pointed out the intraday or the after hours charts last night, and the stock got down to about 155 and low 155s. Obviously, those people who sold in a knee-jerk response, after hours, are probably regretting that today as the stock closed right up near that level that I pointed out yesterday, which is this 2/3 retracement of the this big decline from the December highs to the lows from February. So we're right up near that level, and I'm not going to make a call about Apple. The trend is higher in here, but it's getting a little bit extended, and we'll see what the market brings there. Back to the S&P 500, though, if we look at the 10-minute time frame, you see that we were, again, we made it past these levels in here, But the market did find resistance right up where it had found some just under that 140 level near from the 18th or so. So if the market fails here, it could fail pretty good because I think you're getting a lot of hope built into this market that it breaks out here. So just remember that the trend is higher on these shorter term time frames, and price is the only thing that pays. But this bigger picture with the lightning volume tells us that we still have to be very much on guard for for a potential reversal of this shorter term trend. The Russell 2000 was up 85 cents today, or 1.2%. And as I've been saying, this is the the market that's been kind of more range bound than anything, a much tighter range in here. But bullishly, we do see this market above the rising 10, 20, and 50-day moving averages. But we're again stuck below that major level that has been important at $73 a share. And it sounds like a broken record player when I say it every day too. But I just want to remind you how important that level has been. The downtrend line here is also remains intact. The market was unable to breach that today. So we've got to get past this downtrend line. We've got to get past that 73 level. And actually, for the much longer term trend, we still need to get above that declining 200-day moving average, see that 200-day moving average flatten out. Those are the trends for investors, and I'm glad I'm not an investor because you can still make some great money in on these time frames in here. The level I had said that we wanted to keep an eye on was 71.25 as far as resistance in the market needing to get above that level. And the support level that we were looking at for today, where I said if it breaks below 69.50, that's where you want to become a lot more defensive. We saw that the market was weak on the open, but buyers came in quickly, pushed it up to that 71.25, and now we'll need to see these levels hold once again. So 69.50, continue to monitor that level. If it breaks down below there, then we could have bigger problems. But right now, keep an eye on the 71.25 level. That 5-day moving average is kind of flattened back out and is starting to look a little bit better. And early on, as these markets came down to these levels, some of the bigger momentum plays lately, which have been the solar stocks, were getting hit pretty hard, and that gave me a little bit of reason for concern. So it appears though that they've survived the day at least, and they're just probably the solars are probably just undergoing a little bit of profit taking right now because they've had some great runs. The financials were really the relative outperformer here today. They were up 3.8%. And remember, that's good to see, in particular because we saw that bad news from AMBAC in the market yesterday, and that didn't bring the market down. When you have an event like AMBAC that's supposed to be negative for a group of stocks, but the market that group absorbs the bad news and shows some outperformance like it did yesterday as it held up, and then today we see the buyers come in with this big volume. Now this downtrend line is broken. Breaking a downtrend line doesn't mean that there's a reversal at hand. It means that the rate of descent has slowed. But we've got now some little bit more reasons for bullish hope in here. I don't think the short side makes as much sense, and I've been saying that since basically the Bear Stearns lows. But this 26.20, the market took that out once again. You're looking at this 30-minute time frame. Obviously, we've got this level here, this downtrend line. And that's going to be, we've got a lot of potential areas where we're likely to find some selling, as we've seen selling in these levels in the past. So I've just sketched in a couple of those levels. But realistically, on the daily time frame, I think that getting above 27.5, 27.75 or so, then we could really make a case for a short squeeze rally. So the group is sold out. It's showing some bottoming signs in here, but it doesn't mean it will go higher. Remember again, the most likely scenario after a large price decline like this is a sideways boring time correction. If they don't scare you out, they'll generally wear you out. But if you're a nimble, disciplined trader, there'll be some good opportunities to make short-term trades. I don't think you want to position yourself for the longer term still. The NASDAQ 100 was up 42 cents today, closed at 47.27. That was good for just about 1%. And here's some of these lines that we've been looking at lately. So we've been looking at this downtrend line. The market touched upon that today and backed off a little bit. We've also seen that the 46 and then 46.40 level has been good support. And we've also got this as a potential resistance area, as well as right in here, you see this line. That's the 200-day moving average right in here. So the market looks like, it's continuing to act strong here. On the 10-minute time frame, you see that yesterday I had pointed out that getting back above that 47.10 level would give us a bullish objective of about $1 based on this inverted head and shoulders pattern. And again, inverted head and shoulders patterns aren't typically looked at as a continuation pattern, but a lot of times they do. So I've pointed that out quite a few times on the daily time frame back in July, August, September of last year as well. Look at search the blog for inverted head and shoulders and you'll see what I'm talking about. But for now, what we want to see is well, let's look at what happened this morning first. The market came back down to that level that I had said yesterday was the important level for this market to hold above, which was 46.50. So I put a warning out, be careful in there, and then the buyers took back control and they pushed it back above that 47 level. So now, as far as important levels that we want to see hold as support, we want to see this prior resistance here at 47 hold as support. If that fails to hold, then you got to look at the 46.50 level. And then, of course, 46 is the bigger level. If for some reason we break down below 46, then I think you want to get a lot more defensive, as it will mean that this market had the opportunity to rally, but maybe needs more time to correct.